Yo, good morning, guys. What's going on? Good morning. All right, how's everybody doing? Give everyone a chance to come into the chat. See what's going on with the JASMY chart, shall we? Well, it looks like we're still making our way down towards this golden pocket that we targeted about 2 weeks ago, right? We held support pretty strong at 1 cent 884, but we've fallen below finally, setting lower lows, and we're headed towards our golden pocket here. So everything is on pace, guys. But like I said, if you zoom out, guys, and I have to continue to preface this, if you zoom out, we are still in this falling wedge pattern for 4 months now, right? From what, May 30th to October 10th, man. So June, July, August, September. We're in our 5th month. We're in our 5th month right now inside this falling wedge pattern. We were in this falling wedge pattern for 3 months, and we broke up 500%. So imagine how high we're going to end up breaking out of this one when we get our confirmation of the breakout. We almost did it back here, but we came back inside. So, I mean, guys, like when you zoom out, this is like, I have not seen many charts that are more bullish than this setup. Not many at all, right? So you got to be patient. You got to wait it out. Those who wait it out, those who weather the storm, so to speak, are going to be the better for it. I can tell you that much. All right, let's get into the chat. Guys, as always, make sure you smash the like and subscribe to the channel. Lily, always a pleasure to see you, Lily. Good to see you made it. William, good to see you, brother, as well. Always here. Thank you, William. I appreciate you, brother. Dumb Money's in the house. What's up, buddy? Good morning, good morning. Death Bank, what's up, buddy? Diamond Hands, baby. Crypto Jas, what's up, man? Good to see you. Good to see you. All right, so we got quite a few videos to get into today, and we got some news to get into. But first, we're gonna go check out the crypto bubbles. Let's see what's going on across the market. Some good. I'm sick. Sorry, guys. I got a cold, by the way. So if I sound a little off, I have a cold. My little guy got me sick. Bitcoin holding 60,500. I think it's only a matter of time, guys. We are going to sweep the lows at 57. I've been calling for it for about a week and a half now. That sweep of around 58, 57, maybe even 56. We're going to sweep those lows again first before we head to the upside. Outside of that, we have some good DCA opportunities. Miria is a fantastic pickup, down 5.6%. Amazing opportunity on Miria. I just did a short on Miria this morning talking about their new wallet being able to integrate ERC20 tokens. So check that out, guys. Pith, nice DCA opportunity on Pith. XRP seems to want to be green today for some reason. Oh, Uniswap. Look at Uniswap pumping 15.3% for Uniswap. Look at that bad boy. Boom. 29% of the week. What's going on with Uniswap, guys? I'm going to have to do a little bit of a dive into Uniswap because they're up almost 30% on the week and 30% on the month. What the hell is going on there? LCX took a big hit. From what I understand of what happened so far, I haven't done much looking into it, that they were talking about doing some sort of token migration. And because of that, Crypto John funded the project to all of his followers and convinced everyone to start getting out of the project. Not dissimilar to what he did with JASMY, wrecking his own followers, making them sell at a loss, and then then JASMY pumped like 500% like a couple of months after he told his followers to sell it. So yeah, maybe not a good idea to listen to a guy like that, but apparently that contributed to LCX taking the hit that it did yesterday. So you can thank John for that. Fighting projects is his forte. What else do we got? SEI is a good opportunity. SUI down 8.4%. A lot of people were asking me if they should get into SUI when it was pumping. Well, I mean, it might be a good time to DCA or find an entry point now that it is having a bit of a correction. It might not be a bad idea. So yeah, Wagami Games having a nice day. Aptos and Turbo's having a correction finally. Turbo's up 33% on the week, 65% on the month, guys. Turbo's had a hell of a good time this month. Crazy. All right, let's get into some of the news here, shall we? As I was talking about, guys, Myria, the Web3 gaming platform. I'm very bullish on Myria. If you've been around for a while, you know that. Myria now supports ERC20 token imports, making it easier than ever. Sorry, I'm sick. Making it easier than ever to manage your digital assets. The key features: you can import and manage whitelisted ERC20 tokens, real-time token balances, so you can track your portfolio, track token history, and also no gas fees for transfers on L2s. Very, very bullish. The new Myria wallet, guys. Love to see it. All right, let's get into some of these videos we have. Check this out, guys. SEC Commissioner Mark Ueda says the crypto policies have been a disaster for the whole industry. Check it out.
Well, it's great to be here.
What is the SEC doing regarding crypto?
Well, I think our policies and our approach for the last several years have been just really a disaster for the whole industry. We have been setting this policy through enforcement. We've done nothing to provide guidance on it. And as a result, this is being shaped by the courts. And different courts have ruled different ways. I think what this Wells notice is, and while I won't comment on the specifics of this litigation, the Wells, what has gone on is part of a broader frustration with the fact that we have not provided interpretive guidance as to what you can and cannot do. And if you are involved in some sort of securities offering, how you register, how you get regulated as a broker-dealer, how you get registered as an exchange. Well, it's great to be.
This is an SEC commissioner speaking out publicly on mornings with Maria. Speaking out publicly on national television against Gary Gensler's approach to digital assets. This is one of his own commissioners saying this, guys. That is absolutely hilarious. All right, we got more videos to get into here. Squawk Box, guys. Check this out. The Fed has really emphasized how they're going to try to look at commentary from companies from here on out.
Actually, before we even get to the CPI piece, did you have a thought on this Fed minutes from the meeting in terms of just how split they were over this 25, 50 basis, because it's going to factor in our CPI conversation?
Yeah, I think really the market had come around post strong jobs report to this idea that it's 25 from here. And if there was any doubt about that, I think the minutes clarify that. The 50 really was meant to be just a signal at the beginning. That's what got most members on board, with the exception of one dissent. But really the support here is to proceed gradually, 25 basis points at a time. And
do you think we're even going to do that now? I mean, we were talking about Mark Rowan yesterday from Apollo, who said there should be we don't even need rate cuts. Things are going so great. You save your cuts for when there's actually a problem, and there is no problem.
And I think that's where there's an interesting discussion happening here about what the neutral rate is. So we've clearly normalized to a better nominal economic backdrop. And we've seen that the economy has been less interest rate sensitive. So those are all signs that the neutral rate is much higher than it was in that weird post-financial crisis time period. Now, how high it is, I think different firms, different economists disagree. And for us, it's between 3.5%. So for now, there's still room for this, what the Fed is calling policy recalibration, meaning to bring it from restrictive towards something closer to neutral.
So you think for the rest of the year, we see what? And then factor the CPI piece of this into it?
Yeah, so we think gradual from here. And I think for the stock market, that's perfectly fine, right? It's for good reason. The economy has been fine. It's really just about the Fed shifting from being very reactive to inflation to being more proactive with an eye on the labor market. So 25 in November, 25 in December, and then maybe an additional close to 100 basis points next year, which would get us closer to this neutral of around 3.5%.
Could you see a moment where we only do 25 basis points this calendar year at all?
So I think it's going to be interesting because for many reasons. First, the data is going to get really cloudy, really soggy from here, the actual economic data. We've had strikes, we've had 2 hurricanes, which are really going to complicate a clear reading from the labor market. And a lot of Fed members discussed that actually during the minutes, even before Hurricane Milton. So that data is going to get a little bit soggy. So they've really emphasized how they're going to try to look at commentary from companies from here on out. They've been doing a lot more of that. But you can see how you get to November and maybe they don't have a clear read. Plus, of course, it's going to be 2 days after the election that they're doing their decision, and remains to be seen.
So how do you think that even impacts things to the extent it does?
But we ultimately still think they're going to keep doing their thing, which is recalibrating interest rates. Ultimately, we do think they go another 25 basis points in November. I think the election, the actual policy impact is really feeding through much more to long-term yields, right? We thought the 10-year had really overshot on the downside there and makes more sense to have it around 4%. It's all about these fiscal discussions that are really top of mind. It's going to be the whole discussion for 2025.
I agree, guys. 25 basis points, 2 more times this year, November, December. That's what I've been calling for. I think it's the most realistic, appropriately paced, and then we'll probably see another 4 25 basis point cuts next year. So we'll probably see November, December, and then maybe a pause for a couple of months, and then another 25. It'll take, they'll probably do 1 every quarter next year or something like that of 25 basis points, right, to get us back down where we need to be. But they'll do it gradually. But bringing us down over the next 2 months, another 25 basis points per month would be the next logical step, in my opinion. Most realistic anyways. Check this out. So digital asset investors says crypto asset security is not ETH itself. David Loretza, SEC attorney. How many hundreds of millions of dollars did Ripple have to pay to get this statement from the judge, while the Ethereum founders got it for free? Listen up.
Crypto asset security is not ETH itself. It's a crypto asset staking programs.
So he starts off by saying the crypto asset ETH is not a security in itself. This is before they sued into Ripple. I think before they sued. So they're calling XRP a security itself at the time, and they're in courts saying that Ethereum itself is not a security, yet there's no fundamental difference between them in that aspect.
Staking in this context is about pooling ETH contributed by investors and providing them a pro rata interest in that pool as rewards, often by issuing the reward itself or a new crypto asset. Now, this would be the same situation as if someone pooled silver bars or gold bars or whiskey receipts. Anytime there's a pooling of investment under Howey, an investment of money, pooling of investments so that there's a commonality between investors, and they expect profits from that pooling, how the pool is managed. It doesn't, in that situation, matter what the underlying is. And in fact, on June 18th, 2024, Consensus Software announced and published a letter announcing that the SEC's enforcement division notified them that it's closing its investigation into what's called Ethereum 2.0, which is sort of a common term now being used for the current Ethereum standalone by itself. So that case is a very different case than Ethereum itself.
You have a cite for that case?
That was the Consensus case. There was a letter released by Consensus. It's sort of through the SEC did not release it itself. It was made public through a blog post. We could provide a letter and we could attach that letter to the court.
Depending how the Ethereum is used, it could amount to a security that's regulated, or it may not amount to the security that's regulated. So you have to look at each individual type of transaction.
I mean, that's absolutely right. there are many different ways of having an offering, even for the same kind of, object or asset. There's no, you can't say it's always or never a security in some circumstances, because it depends on how it's configured, how it's packaged, how it's offered, what statements are made. And, that is true, again, of, real estate, some real estate investments, or some investments in commodities like silver bars, depending on if there was pooling or not. Sometimes it is a securities offering, and sometimes it's not. It's highly dependent, as Your Honor points out, on the facts and circumstances of each case. It's particularly true for crypto assets.
How does every other country in the world get it, but the United States still just doesn't seem to understand? It's beyond me. A little bit of FTX news here. Sam Bankman-Fried getting the special treatment.
So, okay, so then, but the problem that you ran into arose from the fact that you used some of that money to give political campaign contributions.
Correct.
Okay, so what did that consist of?
I believe in total, I donated about 20 to 30 million throughout the cycle to Republican candidates.
Okay.
So anywhere from your PACs to individual donations to specific candidates up to I think it was 2,800 limit.
And what percentage of that money went to Republicans?
100% of the money I gave went to Republicans. I've always been a Republican. Yeah, it's just the party that makes the most sense for a plethora of reasons at this point.
Right, but it's consistent with your beliefs.
It's consistent with my beliefs. It's rare to be, I think, young in tech and a Republican, so it's a lot of why I, got involved. But yes.
At the same time, Sam Bankman-Fried famously was contributing to politicians as well.
Correct. He was running, he was giving primarily to Democrats, though he was doing some dark to Republicans as well.
How much did he give to Democrats?
I don't remember the exact numbers. I want to say we're close to 60 to 70 million in total.
Wow.
Yeah.
Okay, so one of the biggest donors in the cycle.
I think he was second or third, yeah.
In the 2020 cycle.
That's correct.
And he has not been indicted for campaign finance violations?
That's correct. He was not indicted on the campaign finance violations. Only two of us got in trouble for campaign finance, and that was Nishad Singh, who was part of the central fraud, and myself.
So he gave publicly anyway to Democrats. You gave to Republicans much less, but you get indicted, he doesn't.
That's correct.
How do you think that works?
I don't understand how all of this works anymore. So I don't know what to say to that, but it's strange, especially since, he was the central political figure. Sort of, this is, yeah.
How do you think that works? He says, eh? So two fraudsters donate to Republicans and they get indicted. Sam Bankman-Fried gives tens of millions of dollars more to Democrats, doesn't get indicted. You can't write this stuff, guys. Unbelievable. Unbelievable. Let's get into some Squawk Box. Check it out, guys. 4 more rate cuts in the middle of next year.
Joining us now to talk markets is Jeremy Siegel. He is Professor Emeritus of Finance at the University of Pennsylvania's Wharton School of Business, also the Chief Economist at Wisdom Tree. And Professor, thank you for being here this morning. We've been kind of talking through what the Fed might do next based on those FOMC minutes that we got yesterday. It does not look like there's a clear consensus at this point. It does not look like Chairman Powell will necessarily be able to drive things the way he may want. And I guess you're someone who has been in favor of more rate cuts. Why don't you lay out your case for it? Because the data that we've seen recently doesn't really play into that. If you're looking at the jobs market, even if you're looking at what Bank of America's Institute told us this morning about the consumer based on the 69 million accounts that they have for consumers and small businesses, things look better than you might have anticipated just a month or two ago.
Yeah, I think for everybody, including Fed, it looks better. But I still believe, and the Fed believes, that we are still way in restrictive territory. Remember, they said the long-term Fed funds rate they want to go to is 2.9. That's 2 percentage points below where we are today. Now, I actually think it's higher. I think it's probably 3.5. where we will eventually go to. When I just looked at the Fed funds markets, when I backed out risk premiums, it looks like about 4 more cuts to the middle of next year, which means maybe alternate 25 basis points and a pause. But let me say the following: for some people say, "Oh, we should stop now. Things are great." I think that's very dangerous. First of all, if you think that the Fed funds rate is at the right level now, which is right very near 5%, then that means that the 10-year is going to 6%, and mortgage rates are 30-year fixed mortgages are going to go to 7.5%, and I don't think that the market is expecting that. So I think when
7.5% on mortgage rates, I don't think that sounds great.
you take a look at what the market is doing and saying, is that, yeah, it's not as low as what the Fed says we're eventually going to go to, but it's still lower, much lower than we are today. Now we're going to get in a half an hour the CPI. I expect actually that the core rate might take a 10th higher on the month over month than expected. I still think 1/10 for the overall, which would, by the way, bring the year over year overall all the way back almost to the pre-pandemic levels. So, I mean, we are almost there on the inflation, and the market is telling us, we need to go further, 25, maybe pause 25. But by the middle of next year, I think we should have a 3 handle on the Fed funds rate.
I think he absolutely nailed it too with that, by the way, guys. Yeah, absolutely. We'll go right into the CPI stuff here before we switch gears. So the U.S. CPI comes in hotter than expected. Bitcoin to slip below 60K. The latest U.S. Consumer Price Index CPI data showed that the inflation stayed at 0.2% in September, up from what the market was expecting. Notably, the higher than anticipated inflation level has fueled market concerns, which is likely to send Bitcoin's price below $60,000 soon. Besides this development, after the gloomy U.S. jobs data, the commentary bets over potential hawkish stance by the Federal Reserve at the upcoming Fed meeting. Now, guys, what I will say is this. They were expecting, I want to say 2.3%, and they got 2.4%, right? So what you have to understand, it still fell by 0.2% at the end of the day. So in other words, inflation still fell 0.2%. So we're still making progress. It just didn't fall as low as they anticipated by 0.1%. So some people are taking that as bearish. Some people are taking it as bullish. Me personally, big picture, it's very bullish. And it also indicates with the fact that we missed 0.1%, 0.1%, it tells me that they need to be aggressive still with the rate cuts, just enough so that they need to be aggressive, but it's still going down at the same time, right? Very, very bullish in my opinion. In the big picture, in the micro, we might drop below $60,000 temporarily, but I've been calling for us to sweep 57 anyways, right? For like 2 weeks now. So according to the latest Labor Department data, the U.S. CPI came in at 0.2% on the monthly basis, unchanged from the August and July levels on the yearly basis. The inflation has cooled to 2.4% in September, down from 2.5%, noted last month, and up from the market expectation of 2.3%. So they were expecting 2.3%, they got 2.4%, but it's still down from 2.5%. So still bullish. However, despite the hotter than anticipated figures, the yearly surge in September marks the smallest gain since February of 2021. Simultaneously, the core CPI rose to 0.3% in the prior month, noting no change from the last month's numbers. Simultaneously, On a 12-month basis, the core CPI, which includes food and energy prices, rose 3.3% from 3.2% in the prior month. Meanwhile, this set of data has sparked discussions in the broader crypto market over the potential impact of Bitcoin price and other top altcoins. Simultaneously, it also comes just after the latest gloomy U.S. jobs data has dampened investors' sentiments. After the U.S. CPI release, BTC was down 1.3% and crossed the brief 61K mark after touching the low of $60,314 in the last 24 hours. Its trading volume rose over 6% to 28.40 billion at the same time. Notably, it has sparked widespread discussion that BTC could dip to 60K ahead. However, the latest hotter than anticipated inflation data appears to have weighted on the investor sentiment, as evidenced by the broader crypto market sell-off. Besides, the market is now anticipating an 84% possibility of a 25 basis point Fed rate cut at the central bank's meeting in November. The bets over the smaller Fed rate cut from the previous 50 basis point prediction have also fueled investor concerns. Besides, it could potentially weigh on the global financial sector, let alone the crypto market. Meanwhile, the latest inflation data has also sent the U.S. 10-year bond yield high to 4.073%. On the other hand, the U.S. dollar index fell 0.10% to 102.595. So for me, guys, I don't know. I think it's bullish on the big picture, but people like to panic in the near term. Now, switching gears, we have Ubisoft to launch its first Web3 game on Oasis. Check this out. Ubisoft, the video game developer behind Assassin's Creed, Brawlhalla, Far Cry, and other titles, is stepping into Web3 gaming with its first launch on the Oasis blockchain. On October 10th, Ubisoft announced that its tactical role-playing game, Champions Tactics, Grimoria Chronicles, will go live on Homeverse, a gaming hub on the Ethereum Layer 2 network of game-optimized blockchain Oasis. The turn-based game is expected to deploy on October 23rd, 2024, Ubisoft revealed via X. As part of the collaboration with Ubisoft, Oasis will ensure full optimization of the game's blockchain elements, the company said. Ubisoft's new Web3 game, Champions Tactics, Grimoria's Chronicles, is a tactical RPG that brings player versus player battles set on the mythical Grimoria. It features 75,000 digital collectibles known as champions, the main character who possesses a unique traits and allows for PvP battles. The game's launch this month comes nearly a year after Ubisoft unveiled plans for its Web3 game venture. Ubisoft Strategic Innovation Labs looks to enhance gameplay in the rapidly expanding Web3 space with the Champions Tactics game and other top titles. According to the video game developer, the goal is to unlock new possibilities and opportunities for players. Oasis' partnership with Ubisoft on the new game adds to the blockchain's platform's growing presence in the crypto gaming sector. In addition, Ubisoft, Oasis count top gaming and Web3 providers Sega and Yield Guild Games, YGG is the ticker for that one, among its proof-of-stake network validators. So very big news here, guys, for Oasis as well, right? I mean, someone was just asking me the other day about it, but very bullish, guys, over on Ethereum. This was the obvious direction that Web3 gaming is going in, is obviously Web3, right? And I've been telling you guys Web3 was going to be big for 2.5 years now, right? However, in saying that, yeah, I mean, look for these other gaming platforms and stuff like that to start getting into Web3 gaming, guys. It's gonna be big. Why do you think I'm so big into into the Web3 gaming sector, right? It might have been kind of mellow and sideways and stuff like that so far, but when it hits, guys, it's going to hit, right? She's going to blow. All right, what do we got? Let's look at the Bitcoin chart here. It's weird because we had the golden cross right here on Bitcoin. So we're waiting for something to happen with that. But we're moving back to the downside again here, 60,000. Look at this, $60,094. Looks like we're about to break down below 60,000 here today. We'll have to stay on top of it, but where is our, here, let's mark it here, right here. That's our level, guys. We need to stay above. But like I said, we're going to come back down inside this golden pocket, in my opinion, somewhere right inside of here between 58 and 57,000. Right inside of here. Perfect little sweep of the lows, in my opinion. All right, we got some Charles Hoskinson. Look at this, guys, trying to defend his sweet, sweet, precious Cardano. He says, you all may have noticed that the Twitter sentiment around Cardano has been more negative lately. This change isn't a reflection of our project somehow failing, but rather the desired result of Voltaire. There have been years of pent-up grievances, unexplored roadmap items, unfounded growth strategies, and needed partnerships that haven't been addressed due to the Cardano's governance not scaling to meet the needs of the ecosystem. Now that Voltaire is here, the new governance is capable of listening and adapting to meet these needs, and also exceeding new roadmaps and grow the ecosystem dramatically. I have my own very long list of grievances that couldn't get addressed before. Charles, you are the creator. No one cares about your grievances. It's not about you, bro. Right? Working on Cardano's native asset Midnight, I'm keenly aware of the things that need to be done for CNAs, from customers to liquidity. I'll do my part, but I'm glad we have an actual government by and for the people of Cardano to work with also do their part. It's the same for stablecoin support. The difference between Cardano and the rest of the cryptocurrency space is that we do all of this together and out in the open. It's why we are loathed by a lot of others. Their backroom deals and dirty tricks can't be hidden because there is no one to ask to do it under the table. So it sounds like a shot across the bow of Ethereum there to me. To talk to Cardano, you have to talk to the on-chain government in more than 100 countries that never sleeps and is very passionate about integrity. Charles seems to not really understand, right? It's either he doesn't understand or he doesn't care. The fact that you have a founder of a project and the blockchain developer of a project, the face of the project, openly come out and say that he doesn't care about the price action of the coin, what does that tell the community, right? Why should I invest in the project? Now, I'm not fighting Cardano. I hold Cardano. I like Cardano. But Charles has to get his together here, right? He's got to start acting more like he gives a crap about the people who are buying into this project. Because right now he doesn't seem to care very much. He's very willy-nilly about it. Oh, I don't care about the price action. I don't care. Don't ask me about the price action. Well, the people who are investing in it care about the price action, Charles. Right? So it might be something you want to address. Anyway, just thought I'd go through that. And we got a couple other little housekeeping things to cover here. So the XRP Ripple has filed their cross appeal of Judge Torres' decision. So they have, in response, they have appealed. The SEC really has more to lose here than they have to gain. And I don't think that they really understand that, but that's it's not like they've it's not like they're exactly intelligent when it comes to their court decisions lately. And to continue on with that, Stuart Alderati, the SEC lost all key points. That's why they appealed. Today, Ripple filed a cross appeal to ensure nothing's left on the table. including the argument that there can't be an investment contract without there being essential rights and obligations found in the contract. So like I was saying, the SEC has more to lose than to gain here, and I just don't get what they're thinking. Because importantly, the SEC has already said that they aren't appealing the ruling that XRP in itself is a security. So that's a misconception that people are having. The SEC is not appealing that XRP itself is not a security on the secondary markets. That can't be appealed, right? That cannot be appealed. They even apologized in another case for suggesting that the token itself could be a security. That's the law, and an appeal on these other issues doesn't change that. So what he's saying here is the SEC making their appeal right now doesn't change the fact that XRP is not a security on the secondary market. Okay. Last year, the SEC unsuccessfully tried to take an early appeal of the rulings that Ripple's XRP sales on exchanges and Ripple's other XRP distributions, like the employees and developers, weren't securities. They'll likely go after these again, and they will lose on both again. We look forward to the Federal Court of Appeals finally putting a stake in the heart of Gensler's misguided attack on the industry. Absolutely. Gerber, finally put this guy to bed, finish it off. Let him walk away in shame doing the Mr. Burns. South Korea's SEC forms a committee to discuss the approval of a Bitcoin and crypto ETF. Guys, more spot Bitcoin ETFs coming globally. This is what adoption looks like. And finally, Mt. Gox has extended its repayment deadline by a year to October 31st of 2025. So the $16 billion that they have to distribute to the creditors, the retail people who lost money, will be extended until next year, essentially. So, yeah. So that is the news as it stands today, guys. I am going to get ready to go to the gym. I will be back later tonight for another live stream. Let's get into the chat, though. We've got some stuff to clear up here. Chris, we went up 500% due to the Apple partnership. Do you think it will happen again? We did not go up due to the Apple partnership, Chris. That was announced after we went up 500%. We went up 500% because the charts dictated that we needed to go up 500%. If I go back and look here on the charts, as you can see, we consolidated in this bullish falling wedge pattern for 3 months before we broke to the upside. So the Apple news was good, but it wasn't the reason that we pumped 500%. However, what was the rest of your question? I know we got a lot coming out, but just curious on your thoughts, Rob. Do you think it will happen again without any news? Oh, absolutely. Look at this structure. We have very similar structure happening here, Chris. 4.5 months we've been inside this falling wedge pattern here. Very, very big pump to the upside is coming, my friend. I believe, I believe probably bigger than that 500% we got in this back here in February. So I absolutely believe it's going to be a hell of a surge, my friend. And it's not going to require any kind of a catalyst. When the market starts to run, it's going to run. Looks like I was wrong, Rob. I really thought we'd see a pump. I know. Me too, brother. Me too. You and me both, man. I'm with you on that, but it's coming, man. It's coming. I was looking into the last cycle, and funny story. Between the 16th of October, at this time in the last cycle, between the 16th and October and the end of the month, Bitcoin went up 33%. Went from being negative to up 33%, and it started on the 16th of October. So this month could still be massively bullish. Aman, what's up, buddy? Good to see you, man. Good to see you. Been a while. Danny's in the house. What's up, buddy? Pump starts on the 22nd of this month. Another uneducated guess. Nice. David, what's up, buddy? From England. Nice. I love to see it. I love to see you guys coming in from all over the globe. Funky's in the house. What's up, buddy? Earth Prospector, what's up? Thank you, Rob, for all you do. Hey, no problem, my friend. No problem, brother. I'm on bull run on pause, Rob. No, we're right on pace still, guys. We're still right on pace. Nothing to be worried about, in my opinion. But I think there's a little bit of uncertainty in the market right now because everyone wants to know what the government's going to do with that 69,000 Bitcoin that they have. Are they going to dump it on the market, or are they just going to put it in reserve with the other like 200,000 that they have, or 150,000 that they have? So we'll have to see what happens there, guys. But other than that, I'm gonna get heading to the gym here. I'm gonna do my cardio and walk to the gym for a change today, and do the cardio that way. So I encourage you guys to do the same. Healthy body, healthy mind, healthy portfolio. I also encourage you to get your butts over to the Patreon and book your one-on-one coaching calls, guys. We also do video group coaching calls, which are extremely popular. Get over there, guys. I don't know what you're doing. You're missing out. We have a lot of fun over there. We do crypto giveaways, swing trade opportunities, TA training. You need help with decentralized exchanges, onboarding and offboarding your fiat from exchanges back to your bank accounts, all that kind of help, guys. So get over to the Patreon. The link is in the chat. It's in the comment section, and it's in the description. So check that out. And yeah, I'll see you guys later.